When you need mealtime inspiration, it's worth shopping Kroger, where you'll find over 30,000 mouth-watering choices that excite your inner foodie. And no matter what tasty choice you make, you'll enjoy our everyday low prices, plus extra ways to save, like digital coupons worth over $600 each week. You can also save up to $1 off per gallon at the pump with fuel points. More savings and more inspiring flavors make shopping Kroger worth it every time. Kroger, fresh for everyone. Fuel restrictions apply.
Hello and welcome to Fintech Insider Insights. I'm Kate Moody, Strategy Director here at 11FS. In the previous Insights episode, we kicked off our two-part special on how to buy a bank, where David Brear and guests covered what actually happens when one bank decides to buy another. Firstly, do go and listen to the episode if you haven't already, because today we are diving deep inside banks to uncover what really goes on inside the organisations themselves during a merger or acquisition once ink is dry and the businesses now have to work together. The process of actually combining two banks can take months or even years as departments, systems, processes, and people are brought together under one group. Not only do banks need to consider the practical things like which IT systems to use or how to get everyone from one email server to another, but there are also wider, really important cultural challenges. So, how do you combine two workforces and two ways of working into one harmonious company to set up for long-term success? To have this conversation, I'm really excited to be joined by an amazing panel of experts who have themselves been through a merger or reported on them or generally experienced them and been there in the midst of them. So firstly, I'm delighted to welcome Dave Morris, Global Head of Technology here at 11FS. Dave, I think this is the first time we've hung out on the podcast together. For those of you people who don't know you, what should they know about you and what you do at 11FS?
Yeah, it's the first time on the podcast for me. So yeah, I head up technology delivery across 11FS as a group, whether that's in our products, on our consulting or wider than that. Previously, I've worked at various combinations of startups and big organisations. I think importantly for this, I was nearly 10 years at BNP Paribas in the wholesale banking team, and I joined there at the start of the merger of Fortis at the end of the financial crash, and went through some of that journey and the interesting challenges that were part of that.
We're going to dig it all up today and get all those skeletons out. So yeah, absolutely. Well, thanks for joining us and looking forward to getting your take as we walk through. It's also a massive pleasure to be joined by Rupy Malizia, Chief Strategic Transformation Officer, HSBC Innovation Banking. Rupy, thank you so much for taking the time out for what I'm sure is a very busy day to join us and share your experiences. Tell us a bit about your role and what you focus on.
Hey, Kate, great to be here. So my role is really to enable our organisation to grow and to scale as well. And that covers all the kind of aspects that you've just talked about and mentioned around process, operating model, systems, technology, data, but also a bit of a bent towards innovation and creating an innovation ecosystem internally as well as dealing with or working with our clients externally from an innovation perspective as well.
Awesome. Well, yeah, thank you so much for joining us and looking forward to hearing from you as you go through the episode today. It's also a pleasure to be joined once again by Mariella Hunter, a fractional COO. Mariella, welcome back to the show. Again, if listeners haven't come across you before, what should they know about you and kind of what you're most interested in and doing day to day?
Yeah, thanks for having me. It's great to be here. So as a 3 times founder, I help venture-backed companies towards profitability through the power of systems, automation, and demand generation. And on the corporate front, which is the topic here, I played at the intersection of corporations and startups, driving growth and innovation through partnerships, M&A deals, as well as strategic investments in corporate venture capital. My background is diverse. Yes, it is financial services, fintechs, but also into tech as SaaS, health tech, and renewable energy. So this helps me bring a more nuanced approach to my clients.
Awesome. Well, yeah, excited to pick your brain as well. So, I mean, got lots to cover here. So let's dive in. So in 2023, there were 3,230 M&A deals in global banking and payments, according to globaldata.com. But the process itself can take up to several years to complete, depending on the size of the banks and organizations involved. When we think about mergers, it's pretty easy just to focus on the big picture stuff we covered in part 1, but really, I think this is just the start of a very long, complicated process. Once that deal is agreed, banks must bring together all of their resources and their systems about impacting the customer. So I'd love to get all of your perspectives on what that actually looks like and feels like on a sort of day-to-day basis inside a bank. Mariella, maybe you could start us off, from your experience of M&A, mergers and acquisitions. How early on should companies be starting to think about the factors like the tech, the systems, and the operations, and how they come together? Would it ever be a deal breaker to a deal actually going through in the first place?
Yeah, I think first of all, every deal is different. So the most seasoned M&A teams have a pretty solid playbook, and even when you have opportunistic deals, those can be adjusted. But I think it's critical for the team to remain agile and continuously learning. This is super important, not just on the tech side, but everything is always new for when you move from one deal to the other. The thresholds to get the deal done to be well defined on the onset are high. And this is reflected in the deal activity, including, as I mentioned, opportunistic deals. Secondly, on the technology, I would say the bar on due diligence technology has increased. Because there's increasing certainty on the cost efficiency and delivery of returns that's still high. And many banks have been burned before when they compare the target outcomes to actually what happens. So there is increasing scrutiny and much better, I would say, resourcing of the team when they conduct the due diligence. Personally, on this point, I'm an advocate of integration team-led diligence. So that means bringing the right people to ask the right questions earlier in the process.
Yeah, that sounds absolutely critical. Rupy, really keen to bring you in here. Obviously, it's been less than a year, or barely a year even, since you guys were SVB, Silicon Valley Bank UK, and it was a pretty unique coming together. Right, happened in a fairly short window of time. So, firstly, kind of how did that shape this kind of consideration process that Mariella set out, and yeah, what's the transition been like? Where are you guys up to right now?
So actually, not only was it a unique purchase, but I was in a unique position. And the reason being is that I worked for HSBC prior to joining SVB. And I'd only actually been at SVB for 5 months. So I literally left HSBC, joined SVB, got to grips with what SVB is all about and our client base and our technology platforms and how we operate, to the point where in March we obviously had the contagion impact, and we had the weekend, and we were purchased by HSBC. So for me, because it was very familiar and I understood the tech environment very, very well, the way that we're constructed within HSBC, it gave me a level of confidence that actually I knew that we could call upon many different people around the world to bring that expertise in. And we had a natural trust there because they also had myself in that role in SVB. And I think that really helped with that kind of engagement with the transition team. We actually didn't call it integration. We actually took a very different approach. So, Mariella, you've talked about playbook. I previously was part of the team that did the HBOS to Lloyds integration, and that was 32 million customer accounts. So it was a massive integration at that point, and that was very much a playbook, and that was over 2 years. This was a very, very, very different proposition. We executed the transition in 100 days, and that is really unheard of. And that's getting onto the technology platforms from the previous parent group that was now bought by another organisation. So we didn't really belong to them, but our data assets and our client information was there, and we needed to quickly get that across. So I think knowing that the expertise existed in HSBC technology and being very close to them, I knew, and we knew, that we could get across in an effective way, and and it was every aspect of the organisation. So when we did the transition integration, we were across about 20 work streams that were jointly coming together from our side and from HSBC side to work together very collectively and collaboratively to get to the end result. It was tough because 100 days, Marielle, I'm sure you know this, that's quite unheard of. It's very unique. That was a technical cutover, ensuring that our clients were in a position to operate. We could operate the bank as well on the Monday after the weekend happened. So there were many different factors we had to think about, Kate. But collaboration, trust in the process, making sure we had a voice at the table was really, really important. And I think having me in a unique position, understanding HSBC, did have that sort of unique aspect to it, which helped us bring it together in a smoother fashion.
Yeah, absolutely. I can imagine that must have been absolutely critical. And as you say, I'm fairly confident, 100 days will be fairly unique is the word you used, I think, correctly. So it's probably a challenge to identify like one particular component of that was the most difficult. But I mean, I'll ask you to do it anyway. I mean, what was the hardest thing to manage as part of not that integration process, I suppose, but yeah, this transition more broadly?
So I don't, because having done quite a large scale integration before, I knew what to expect. So on that side of things, integrating into an organization, transitioning into an organization, I knew would be fine from the nuts and bolts of it. The key thing was going to be the cultural aspect and ensuring that we kind of maintained the SVB culture, which isn't that dissimilar from HSBC, but probably is a little bit more, a nod towards the innovation style of approach. So that was one area that we had to really focus on and treat with care. And HSBC were very respectful for us as well to do that. The second aspect was actually the technical migration of a organisation's platforms that we no longer belong to. That was very, very difficult. And that required quite a lot of negotiation with a company that we didn't belong to. And that took quite a bit of time and effort and conversations in San Fran to get us to the point that we could do that full transition. So a lot of negotiation there.
Absolutely.
That was the harder bit.
Hopefully a lot of biscuits consumed, at least. This is always my key requirement for any kind of like difficult meetings is plenty of biscuits. But Dave, obviously, you live and breathe the technology. Maybe for our listeners who aren't as technologically orientated, can you dig a bit deeper for us? Like, what does it actually mean to merge systems in a business? Why is it so hard?
Yeah, it varies massively depending on what the merger is. If you take the SVB case that Mariela's just talked about, that's a carve out effectively of you have to get off those tech platforms, and so there's a push there to move you from effectively technology platforms you no longer own. But in other scenarios, you see different complications depending on the scale and things. So if you think about the Fortis merger with BNP Paribas that I was part of, that was two multinational banks being brought together with everything from retail to investment banking and beyond in each of those. And so a lot of that was about identifying where are the commonalities, the overlaps, what can be brought together, what doesn't make sense to bring together, and where do you want to have a single culture and where do you want to keep it separate. So very much on the retail side, they wanted to keep that very separate, and they wanted Fortis to own an identity still in Belgium. But when you started to look at investment banking and things like that, they very much wanted to focus on consolidation and bringing those things together. The challenge, I think, on a lot of the technology is you tend to build banks in vertical product lines of tech stacks. Now, that's in some respects makes life easier because you can pick and choose and say, well, we don't have overlapping business lines and product lines, so we bring this one forward and this doesn't exist elsewhere. But it makes it harder where you start to look at those monoliths of stacks and how do you actually pick the right one and bring the nuances of migrating customers onto those stacks in there, because effectively you're trying to lift data from one world to another. And over time, where those stacks, particularly in the core banking areas, have been built, a lot of that is knowledge that's lost within the organization. So you're almost having to reverse engineer some of the knowledge of how that's managed and how that data is used. You think some of these systems are 10, 15, 20 years old, particularly on the mainframe side. And that makes life really, really hard as you lose a lot of that knowledge. And so you're almost having to reinvent things in there. And I think that's why they are the areas that take the most time. And often the early focus from a technology piece is around the more common capabilities that actually get you some quick wins. And I think that the tech teams want to be able to show that they're adding value and reducing the cost base as quick as they can. So they'll pick on some things that they can get the quick wins on, common capabilities like, KYC or payment engines or, central party management systems or, CRM systems, where it's easier to bring some of those things together because they tend to be newer. They tend to be more modern stacks that they can bring those pieces together much more easily. Start to see those wins and start to actually, you build momentum in technology from wins on those things. So that's often where you see a lot of focus on those things. But it's never one size fits all, because the complexity of the organizations, it's not about the technology ultimately, it's how you use the technology. So you weld it into the operations, into the processes around them as much as you are the technology itself.
Mariella, did you want to come in?
Yeah, Dave, so happy you mentioned data because in my experience in bank-to-bank integrations, migrations, the focus is almost 90% on the tech. And data, I've seen it being almost like an afterthought. And this is such a massive component if you get the data wrong further down the line in terms of, really understanding it pre-migration. I'd be curious to hear, why do you think this is happening still today? And what are the key changes you're seeing in terms of data integration and migration?
Yeah, I think there's a lot of movement from that world that was everything was focused around a P&L of a product line, and so data was in silos. And as you'd start to see some of the things that happen, with some of the big regulatory changes around BCPS 239 and things where people had to understand and be able to communicate their data more holistically as a bank, that's forced to think about data as a more horizontal view of the world. You now have people who are dedicated to roles in those places that understand that. And a lot more banks have started to really see the value of having data brought together. And so I think that makes life much easier. And, but a big part of my role at BNP Paribas was owning, data platforms globally. And, it's dear to my heart on that side of things. And I see that's, how important that is. But if you get that right, that's massive value. If you get it wrong, you're dead in the water almost from the beginning, from my perspective.
Yeah.
I'd probably just add to that as well. So I think that I would totally agree with both of you, actually. What I would say is that for the SVB transition into HSBC, data was a forefront of our conversation. So that's part of the extraction out of a parent group or a group that we didn't belong to any longer. We had to get that data out. So, we would have multiple meetings on data every single week. The extraction of data, how we're going to do it. We closely manage it. Executive teams, myself and our COO as well, we're all across it. And then, moving into an organization that has established tech platforms, global tech platforms, understanding where our data is and how it's structured, and then how we can use that from a future-proofing perspective. So I think for us, it's, I think it was a very much a data-led transition on all aspects, as well as, underpinned by technology. And our continuing conversation is now on, okay, we know the data's in a very complex landscape of technical architecture, but we now need to make sure that we're future-proofing it. So when we move into things like Gen AI, it's no good if we don't have the data constructed in the right way. So when we start to do a nod on innovation internally within HSBC Innovation Banking, we are priming on those conversations to look at, okay, we've gone through a 100-day transition. Now, that means you've still got cleanup to do and you've got to get everything sorted out. Your focus is client. Your focus is also regulatory and financial reporting. And also from our colleague perspective, that's the sort of stage 2. The stage 3 that we're doing in parallel is very much around how are we going to think about our data strategy and our data platforms in an innovative way, utilizing what HSBC has to offer, but taking it a step further. So we're almost priming for exactly what we're going to do in the Gen AI space or any other kind of innovative technologies that we want to be bringing in to assist our clients and also to assist from a colleague perspective. But if I went back to the previous integration I was involved in, I didn't feel that the data was as important. It was important from, moving 32 million customer accounts across to different tech platforms, and that was a key financial control and operation control. However, it wasn't as primed as a conversation as it is currently at the moment. So I'm definitely seeing a shift there.
Yeah, I think as people start to think about the whole AI world and things like that, there's so many people who are talking about it as a buzzword, but actually, ultimately, if you don't think about the quality of what you're putting in at the bottom of that, it's irrelevant. You're not going to get anything out. It's that whole, rubbish in, rubbish out concept we've always talked about in, back from the traditional reporting days through, it still holds true for AI. So
yeah. No, I totally agree with you. Totally agree with you there.
Yeah, absolutely. Tons of things to think through. Obviously, it's a hugely complex process. Mariella, we've been talking a lot about the internals of these organizations, but I assume lots of these things can't happen in silos. What are the dependencies around these banks, these organizations? Obviously, they need to be having huge amounts of conversations, negotiations internally, but how many other teams are involved in managing these kinds of mergers and acquisitions outside the banks or the fintechs themselves?
Yeah, as I think we keep saying, every deal is different, every seller is different. So we're just talking to hear trends. I would say before even the deal gets done, and I like Simon Sinek's book on finding your why, before embarking in any transaction, having super clarity on the why this transaction is happening in place, it should guide everything else, because every transaction is quite unique. So more recently, the deals that have been involved have been on technology, for some of the reasons you guys mentioned earlier, around AI and other key strategic technologies that companies are acquiring. And when you think about a deal around technology, the guidance typically is around the asset and the IP. But in most cases, about the people who created the technology and who will maintain the technology. So you now take a shift, not just from the technology, but a huge stakes in terms of retaining those people on the packages and the culture that they need in order to stay. Because it might well be that you have a large corporate that has all the capabilities to absorb them and the most amazing M&A and integration teams. But if that team, regardless of the packages, is not willing to transfer because of culture or other issues, the whole deal is dead in the water. So that's just one example of being very clear on the why. Beyond the questions of the why, I would say we talked about what does it mean to have the transaction done, and every single work stream level, because both the buyer, the seller, and every single person that was involved in that transaction wants to know, what does it mean to be done from every aspect. And so some of the definitions, for instance, are: what is the end state on technology architecture? What is the end state when it comes to customer value props, the products coming together? What does that feel for customers and across everything? There's just the online experience, the mobile, the channels, what products are they going to have, pricing, everything has to be defined. And some things like the consolidated geo footprint, properties, another, I think still big one in larger banks. So what does it mean in terms of the employees working together? Back to the point of culture, that could be hugely defining, right? So having that why in the first place, and then the end state, and how do we know when we're done, I think that's some of the key ingredients to this.
Rupy, are you done?
Yeah, no. Well, we're done on the bizarrely, we are done on the transition, even though it seems like it was quite a fast one. But we've had all the support that we needed through HSBC from the top of the house right the way throughout. And actually, it was a fantastic opportunity for me to see former colleagues lean into the transition in the way that they did. And we were working 24/7, and we were probably around 700 to 800 people across both sets of organizations, and probably more across 20 work streams. And when I say work streams, I mean marketing, legal, HR, technology, every risk, every aspect that you could think of that as a bank runs. There were people from every single team. And not only were they working on a day-to-day basis, they were on every single weekend, night shifts, day shifts, etc. So we were working incredibly fast, but as a single team, and that's what we strove to do. We have got things that we're finishing up, but actually it's not as bad as I thought it would have been. And I think we're nearing conclusion on that. But we've fully transitioned. Clients are fully operational. Got full access to our customer service, and our relationship management teams are out there. Our organisation is operating. We're out in the ecosystem from a banking perspective, but also from the innovation networking perspective. So I think we're at a point where we are just, it's dare I say, BAU. There will be always things that come up through the year, but they're just things that we would just deal with, and it's just into growth mode and scale mode now.
Okay, well, no, that's awesome to hear. I think it's probably a good time for us to take a very quick pause. After the break, we're going to have a look at the more operational side of the merger, and we're going to discuss how to manage staff through what, by the sounds of it, is obviously a highly stressful time. So don't go anywhere. We'll be right back. Welcome back to Fintech Insider Insights, where we are discussing what happens inside a bank during a merger or acquisition. We've spent a lot of time in the first half talking about the tech, but now we're going to look at the rest of the business. Yeah, so before the break, Rupy, obviously you were outlining kind of the huge effort that had gone into the work you've been doing at SVB. How do you take staff with you on that? How do you avoid them all just like collapsing in a heap halfway through? Like, it just sounds like such a huge workload.
It was a huge workload, and we had constant communication with our staff. So we were on site all the time. We had regular updates. So we were very transparent with them as well. I was certainly doing weekly updates as well as our CEO, Erin Platts, was doing regular updates as well. So we built that relationship with them to make sure that what we're doing is in the best interest of our client base and also our colleagues. And they truly felt it, and they knew that we were at the front of the trenches. We were not behind them. We were right in the front of the trenches, and I certainly definitely felt like that. We checked in on people. We've got an amazing HR team that were actively engaging with all of our staff to make sure that their well-being was good. We were keeping an eye on, are we burning people out? Do we need more resources? And one of the things that HSBC was great at doing is to say, look, if you need more people, you just need to say. So let's not oversweat the individuals we have. Let's add in where we need to. And obviously that's sometimes challenging when you've got key SMEs that, you just can't backfill, but putting the right support mechanisms around them was crucial. But part of this journey, if we didn't do the regular communication and also honest, transparent communications, I think we would have had a very different situation. They went on the journey with us. I think what is very unique about HSBC Innovation Banking, formerly SVB UK, is that the reason why people are in the organisation is not because it's a job, it's because they're here for the client base. It's an innovation ecosystem that everyone truly believes in. So there's a strong sense of purpose. So I think for us, having that sense of purpose and drive and wanting to continue the organisation as it is, and trusting the leadership team that we were going to retain the organisation as is, has been a key factor in people coping with the volume of work that they had to deal with. And we're coming on the other side of it, and the teams are still flourishing. It doesn't feel like we went through what we went through, and they are just pushing forward. And the conversation on the ground is, how do we help our clients? How do we get out there in the innovation ecosystem? How do we continue to connect front to back in the organisation to make sure that we're scaling effectively?
Dave, obviously the pitch that Rupy describes sounds, hugely positive and very impressive. I mean, I guess it doesn't always pan out that way, right? Like, when do people get this wrong? How do they get this wrong?
I think the transparency is hugely important, but obviously it's not always as simple to come in and say you're going to keep all of the teams intact, because typically, particularly in technology, you want to reduce costs, and ultimately one of the biggest costs is people. So you're going to want to consolidate teams and that. So you do the transparency helps in that, but ultimately at some point you're going to have two teams doing the same things in the two organizations, and one of those, and is there a fight as to who is the better and that. So actually trying to be very clear as to, this is the strategic direction, you're actually one team and you're merging together to become then the target team, but you do know that it's not going to be all of you on that at the end of it. Now, you recognise that some people aren't ever going to be on that journey, and they don't want to be part of the new organisation, and just so it's a big challenge for managers really to make sure that you really are as close to the people and knowing what's going on as part of that, because change is terrifying to a lot of people, whatever change it is, and something like this layers uncertainty on it, because there are things you can talk about and things you can't talk about during these processes, because ultimately some of these things are pure HR things that you have to go through legal processes on that you can't talk about in certain ways.
Mariella, we've kind of had a tale of two halves here. Like, Rupy's talked us through like a really great example. Dave set out some of the kind of more difficult, challenging elements. From your perspective, looking across multiple deals, do you think we are learning from the stuff that goes well and kind of ditching the bad behaviours, or is it not quite as simplistic as that?
Yeah, every organization is in a different trajectory, but definitely the ones that have done quite a few deals before, there's pretty good feedback loops between the teams that are originating the deal and negotiating and the teams that are integrating. So you have that constant reinforcement of, that goes into the due diligence earlier on, and then what to do later on. So I think particularly for larger banks, things are getting better. Now, when it comes to deals, when it comes to acquiring fintechs, or even, this is all M&A, it's not partnerships, but you see it in the partnership types of deals as well. There are always so many differences when it comes to the types of transactions, when it comes to the fintechs, if they have never been through a transaction like this before. Then there's a bit of a learning curve, but also some surprises, because when somebody waves a big check, sometimes they say what people want to hear, and sometimes it comes without warranties or the right protections in the contract. So there's always a few surprises there. But I think going back to Dave's point around the people aspect, I would say when it comes to the top front and the exec level and some of the key people, things tend to be really smooth and well. It's when you get to different layers that things get quite complicated. But I'd like to touch on something that Dave said, which is super important. It is, people know, they've been through quite a few transactions before, and they know that efficiency is one of the major plays of any M&A. And the best thing is to be transparent up front, being super accountable with clear communications, because when things do go wrong is when you have longer periods of prolonged uncertainty, indecision, lack of clarity. That's a huge burn for everyone. So I would say just move quickly, swiftly, communicate clearly from the front, from the top. Top leadership, as you mentioned, Rupy, is critical, but it has to be very efficient and very swiftly to avoid those long periods of indecision. I think that's the key thing to avoid here.
Yeah, no, absolutely. I'm keen to also think through some of the, obviously we talked about a lot about the culture and the people, which is essential, but I'm also keen to think through some of the practical operational challenges. So banks, for example, have separate offices, like separate working spaces. Rupy, obviously you were already the UK arm of an American bank, so there were probably like things for you to work through there. But yeah, how's the kind of, how the physical considerations of managing two businesses or bringing two businesses together been?
Well, I think I've obviously got a positive spin on quite a challenging period of time. So I'm probably sounding quite rosy, but it was obviously a tough transition period. But what I would say is we were on the tech platforms of SVB US, so we utilised all of our tech capability was with them. So all of our tech capabilities with HSBC. So we've kind of almost flipped from one to the other. So it's made it a lot easier. We didn't have any tech teams to integrate as such, because that didn't exist for us in the UK. So with regards to property, we have our offices in London, which is sufficient for our size of organisation. HSBC have their property portfolio. And what I would say is it's slightly different for us because we are slightly different to most of HSBC. So they want to keep us as a unique offering for the innovation ecosystem that we're operating within. They don't have a complete like for like within the organisation. They might have some aspects of similarity in commercial banking, but we're actually having really grown up, mature conversations on where best to have that type of activity based on skill set and experience and actually viability from a scale perspective. So we are having lots of grown up conversations there. The HSBC UK COO actually signed our lease for a much longer period of time for us to stay in our offices. So there wasn't a move to say, right, you've got to move over to 8 Canada Square. You've now got to be part of our premises. I have to say there's been quite a mature conversation around how we operate, because it's a slightly different banking client to what they're used to, and they want to keep this uniqueness about us and kind of protect it in a way. Now, whatever happens in the future when you scale, etc., that no one can define that, no one can determine that. So for us, it hasn't been that, right, you're now part of us, you now need to come to HCS, you're moving all your teams there. That would have been an absolute mistake to make. And Mariella's point earlier, which is, people have to go, fintechs being acquired or going into an organisation, and you have a big check waved and you go, great, this is fantastic. But there's lots of watch out clauses. The company that's acquiring needs to really think through how they go about doing this, because you're going to lose the asset that you've bought as a result of the way that you do it. HSBC parked their playbook. They knew that. They took a very different approach with us, and they continue to take a very different approach with us. We're not separate from them. We are fully integrated, and we work with all the teams within the organisation. We go to the different offices around the UK and globally, but it's pretty seamless. It doesn't seem to be an issue. So from our perspective, it's not been anything really different for us. We had a parent group in US. We've got a parent group across the globe and in the UK. So it's straightforward.
Yeah, no, I think it's such an interesting example. Dave, like, how big a difference does it make to have teams in a physically separate space?
For technology, it's not such a big deal because we're so used to being disparate and, nearshored and offshored and things nowadays. So I don't think it's a big challenge from a technology side as it is in the same way as it is for some of the areas of the business. A lot of, particularly post-COVID and things like that, a lot of technology teams are still working remote and hybrid, a lot more so than they would have been historically. So it's not, that is part of the life that we are as a technology organisation, that we have that disparate nature. It does make challenges of how do you actually communicate and get buy-in much harder because you're, wanting to make sure that those messages are there. But that's where actually the effort of making the time to travel to those places. I had big teams in India. If you really want to actually get the buy-in and the message there, you go and you sit with them for a few weeks. You don't do that on a Zoom call remotely and things like that. It's absolutely key that you take that effort and you make sure that they feel part of those organisations without the proximity that you get from there. And I think it's just how we've built up to how we are now from that point that we decided that we had to start being, it wasn't all just in one office in London. You've now got, I think when I finished at BNP Paribas, I had teams nearshored in Lisbon and Madrid, 2 centres in India, some nearshore people in Canada for the US side of the operations and things like that. So you end up with that's just the nature of your team, and so you build around that. But it does make communications on some of those change aspects harder because you want to be able to communicate the message at the same time to everyone. So you don't want it to dribble out, but you can't because they're not working all at the same time and things like that. So it brings other practicalities into some of those things.
Yeah, no, for sure. And Mariella, I was in not the HSBC office yesterday. I was in another kind of UK bank's office yesterday, and we spent a lot of time talking about the differences between 11FS's flexible working policy and the bank's work from home versus working in the office policy. So I suppose I'm keen to think through. That's just one example of a policy different in employee benefit. Where do kind of differences between organisations, benefits, incentive structures, when do those come into the conversation? When do those start to play through, and what opportunities or challenges do they create?
Yeah, back to, and I'm more in the sort of similar size of the loan FS transactions now, moving from big corporate. So I get that is huge in terms of culture, the flexibility, and some of those perks and lifestyle. I would say it's quite critical in those tech companies. But it's very early on. So back to why are we getting this deal done? When you have key players that need to transfer into the new company, keeping the culture and keeping the retention package, but also the right environment for them could be one of the top conversations. Because in order for the deal to happen, if you're talking to the CEO of the fintech or you're talking to another company, those types of conversations would come pretty earlier on in terms of what does it take to get this deal done, especially if it's of value to both players. So those types of negotiations will come in. Now, further down the line, when you look at things as, packages that are much more traditional, health and others, I just think they need to set the bar and stay at a stage where the teams will migrate. But it's all about who are the key people that need to move and what does it take to migrate them into the new company. Now, for the others who will not migrate because of the consolidation efforts, those types of conversations also happen in terms of driving the best outcomes for those that are not part of the integrated entity.
Absolutely. We've spoken a lot today, I suppose, about, and rightly so, about the challenges. Like, this is a huge challenge thing to get right. But I suppose I'd like to close out the show by focusing on trying to switch maybe to the positives. So, Dave, what are the long-term benefits of getting a merger right? Like, what are the positives here? Like, what should people really be focusing on from that perspective?
I think for me, if you bring the best of both parts of what you're bringing together in a true merger, then you have an organisation that is more valuable and better as a whole in that. And that's, I think, it's the true best of the two halves that you're bringing together in that. No merger is ever really truly equal, but actually you should have a more valuable organisation at the end of that, and the best of things, whether you had better packages and HR on one side or better technology on another side and things, you should be trying to maintain and keep the best of those things, and ultimately it makes your whole organisation better as a whole, worth more, and improves both the customer experience but ultimately shareholder value across it.
Fingers crossed. Yeah, I mean, Rupy, what's been the kind of the North Star that you've been holding teams to, or like sharing with teams to get you through this kind of obviously very intense, very difficult period?
I think the North Star is that we are going to be the bank in the UK that is continued to be a leader in the, with the clients of the innovation ecosystem. And I think we have a much more sort of longer term view, which is we work with clients that are going to help make a difference to society, to the world, etc. And I think that we're vested in that. And I think the other aspect of just the North Star on the transition side of things is focusing on the best of both worlds. We have international reach. We have global reach now, which we didn't have before. There are things that we were doing in a 2030 strategy for SVB, which have been accelerated and are in place. And it's just about utilization of that. So I think people can see broader opportunities. So for us, it's very much about growing the business and scaling it appropriately, and also leveraging in a mature way the assets of HSBC that can benefit us, as well as we're benefiting HSBC as well from a broader proposition that they can offer globally.
Well, I think that's a great place for us to wrap up today's show. We could spend hours and hours talking about this. Obviously, it's a hugely multifaceted thing for organisations to do. But thank you so much for joining us. I hope you've enjoyed our short series on how to buy a bank. And if you haven't yet listened to part 1, please do check that out. David Brear chats to some great guests, discuss the bigger process, the regulatory change around M&A, and it gives you all the context you need to enjoy this episode even more. So again, thank you so much to today's guest for joining me. Where can people find out a bit more about you, Rupy?
HSBC Innovation Banking, and also LinkedIn.
Fantastic. Dave?
LinkedIn and across all the 11FS content, obviously.
Absolutely. And Mariella, what about you?
Yes, do get in touch. Mariella Hunter at LinkedIn.
And you can find me on LinkedIn as well, Kate Moody or kate@11fest.com. Thanks for listening. If you like what you've heard, follow our podcast and don't forget to leave us a review. It helps us to make it better and helps others find the show. As always, if you want to join the conversation, find us on social media, just search for 11FS or Fintech Insider, or email podcasts@11fest.com. Thanks very much. Goodbye.